Not only is Apple everyone's favorite stock to trade, the company is also ranked #1 intimate brand in the United States. And this is according to MBLM's Brand Intimacy Report for 2017. Mario, thank you so much for joining us at the Nasdaq Market Site Studios. This is a fascinating report. I actually went through the whole thing. I find brand intimacy such a relevant topic, but tell us what the Brand Intimacy Report is. It's a pretty comprehensive.
Well, it's great to be here in brand mecca of Times Square, and I think it's apropos to talk about something like brand intimacy. We were passionate about this. It's a 7-year journey for us where we're looking at how do brands form relationships with people and vice versa. What are those bonds like? How do we measure them? And then how do we compare them with other brands? Who's doing it well? And what can we learn from it? And that was the impetus for the study, and now we're doing an annual exploration of 6,000 consumers studying 500 brands in 15 industries and really trying to get at the inner workings of what makes them successful. How do they build those bonds in ways that others can learn from?
And is there a correlation between brands that are ranked highly on the intimacy list relative to their stock returns?
Well, this was an interesting finding for us. You know, intimate brands are really driven by emotion, and we didn't really necessarily know that there would be a financial return in that. So we were surprised to find that when we studied the most intimate brands, they actually outperformed the Fortune 500 and the Standard & Poor's 500. And that to us was shocking, that you can do something that's really intuitively smart, but also make great returns on it.
And let's talk about Nasdaq-listed Apple. It's no surprise that it did make the top of the list.
Right.
It's just so integrated in everyone's lifestyle.
Apple wins and sort of thrives on almost every dimension. It's top with women over men, which is an important distinction that may surprise folks given that it's a technology brand. It does well across every segment. It does well across income levels. It's the most frequently used brand. It's the brand that most people would pay more for. It's one of those companies that really is doing everything right.
Right, so let's go over the top 10. Apple's followed by Disney, Amazon, no surprise there, Harley-Davidson, Netflix, Nintendo, Samsung, Whole Foods, which is interesting to see that on the list with Amazon, BMW, and Toyota. It seems as if there's some escapism at the top of the list. Why do you think escapism type of companies are performing well?
This is something that surprised us this year. The entertainment brands did extremely well, and Netflix and Disney are two very different brands, but both excelled in ways, and Nintendo as well, gaming brands, gaming platforms. And I think some of this has to do with the divisive election year that we all went through last year, and a bit of that sort of hangover is still in the mood. I think people are eager to escape that world and venture into the world of entertainment. And brands that are, I think, tailoring their experiences around what consumers are looking for today are doing well in that regard.
Right. It's also interesting that luxury brands were in a decline.
Yeah, this is the first year we included luxury brands, and we thought that these iconic brands like Gucci and Louis Vuitton and others would do extremely well, but it turns out that they don't rank from an intimacy perspective as high as more staple brands do.
Well, it's really no surprise if we take a look at employment data. We'll get our next set of numbers this Friday. There's no wage growth.
That's right.
These type of companies require healthier wages to afford their products, so it kind of makes sense to see them fall off a bit.
In an era of stagnation, it's going to be interesting to see how luxury brands pivot. How are they going to find a way downstream, so to speak, to build those intimate bonds for millennials and for folks who are looking at the world in a more maybe moderate and frugal way.
Right, and to wrap it up, let's talk about Amazon and Whole Foods, because really, especially in the stock market, this has been one of the most talked about stories for 2017. What are your thoughts there? Yeah,
my thoughts are incredible acquisition for Amazon. This is, by the way, two very different brands. One that really thrives on fulfillment, another brand that is strong in identity. And I think it's a great synergy. I think you're going to see both of them take advantage of each other. I'm assuming that they're going to leave the Whole Food brands alone, meaning it's going to stay autonomous to the marketplace, which I think is important. People really bond with that brand in powerful ways. For a small company, ranking #7 is a major achievement for Whole Foods. So I think it's a smart buy for Amazon. I think they're both going to do really well with each other's strengths.
All right. Well, thank you very much for joining us at Market Site. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.